What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 21st of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, we've got a wide range of topics to cover. We're going to start off by taking a look at the dip in cryptocurrency markets over the last few hours and talking about where we might be going over the next week or so. Outside of that as well, we're going to be talking about some comments made by Secretary of State Mike Pompeo on how to regulate cryptocurrencies in the United States. Along with that, we'll be taking a look at traditional markets and seeing why in the United States we might be able to see a continued expansion on already the longest economic expansion in U.S. history, even though we might be expecting the beginning of a global recession here in the coming months. We've got lots of things to discuss, guys. Let's not push it off any longer right after our quick sponsor. Alrighty, everyone, so let's go ahead and start off by taking a look over the market, and we can see here that Bitcoin is almost down nearly 5% over the last 24 hours, and really outside of a few exceptions like Ethereum Classic, the general market right now is down across the board here. Most cryptocurrencies obviously getting outweighed by Bitcoin here to the downside. So again, seeing some pretty serious sell-off here. We'll talk about it as we look at the chart here and what I think that's leading towards in this case. But again, we're still seeing this similar trend here as we take a look at overall market cap. We're getting lower highs here. What I do like to see is that we're not setting new lows in this case, but I have no doubt that if this continues to pull over, as we're going to talk about more in the next few minutes here, the update, I do believe that we could come down and retest back to these lows here, and I'll explain why I think that is. It has more to do with taking a look at the Bitcoin chart here in just a moment. But the interesting thing I have to say is I do like the general flattening here on Bitcoin dominance. I really do think that, again, there is some room potentially here as we're hitting the same kind of resistance level we had in the beginning of the first cycle in 2017 when alts started to get dominance on the market at a pretty severe rate. We might be able to turn over here. This is a very significant level for Bitcoin dominance to breach here. But again, I'm not guaranteeing that there's going to be an altcoin cycle, guys, nor that there isn't going to be one. I'm just saying keep an eye on this. We might see a trend shift in this case. Never get caught up in your own viewpoint, guys. I have no doubt Bitcoin can continue rising higher, but at the same time, I do have a hedge position in this case in some altcoins, and we'll hopefully see something happen. I would love to either increase my Bitcoin position or see a lot of the other different projects that I really like continue to take off in the space. But again, it doesn't really matter what your objective is. I'm just letting you know it's a possibility. All right. So let's go ahead and talk about the current price action here. And as you'll see, I don't have the daily time frame on what I've got on in the sense of my chart. I'll go ahead and pull it up here just to show you guys what the daily chart looks like if you haven't seen it. Again, nothing too severe, similar repeat of what we had back here on August 13th in the sense of price. And what I want to emphasize here in the sense of price is not just the daily chart. We're obviously testing the 100-day moving average right now, a very significant indicator in the sense of the overall exit out of the accumulation phase. But I want to talk about what I think is most relevant in the sense of price action, and that is what we're finding on the weekly chart. If we take a look at the previous cycle here, we can see here that if there's one indicator on the weekly that matters, it's the 21 week. Now, for those of you who don't know, the 21 week, or the 21 MA in this case, moving average, is very significant when it comes to defining momentum. Okay, it's a momentum moving average in this case. Usually, you're using it on the daily time frame for stocks or cryptos that are really moving up in, kind of rapid fashion. But when you're talking about larger assets like Bitcoin, you're usually going to want to look for things like the weekly. So we can convert that 21 MA to the weekly chart, as we can see here, because it's adjustable depending on what time frame we're looking at. And we can see here that we've had continued support here, continued support here. And as we go along the chart, I apologize, there's a little bit of an anomaly on this price. Until we start getting into the parabolic phase and really through the exit of the accumulation phase, we start to see the 21 week playing as a key level of support here. And I think that's what's coming up right here in the next few weeks. We have had, fortunately, a time where we almost had this kind of privilege where Bitcoin has just been able to kind of push sideways. It's kind of cooled off a little bit after the craziness that we've had all the way from, for example, April to June of this year. And we finally have a period where we might come down and test on some very key technical support. And I think that's going to be the 21 week. We're really not that far away. And there's really two ways this could play out. It really could be that this extends for another few weeks into the close of August and maybe early September and really just pushes sideways as the moving average catches up. Or it could be that we have one more down week and we come down to the upper $8,000 range. Neither are that bad, honestly. And I think this will be probably my last average in before we start leaping on to the next cycle. And then after that, I'll continue to try to build up my cash position and try to average in on the next dip. But, we've had a lot of time, guys. I mean, there's been a good few weeks here where we've had some time to prep for the continuation of the larger, broader cycle, if that is, again, something you're looking forward to and believe is going to happen. But I do believe that's going to happen this year. That's why I'm building my positions. That's why I've been averaging into some, not only altcoin plays, but again, building on my Bitcoin position as well. So again, getting a decent amount of positions in a market that I think is going to do quite well over the next few months, going back up to its previous all-time highs. That's at least my opinion. Now, some of you might be asking why the market sold off like it did, and honestly, I can't find much rationale for it. I checked, for example, the troll box here on Crypto Watch, trying to see if there was any kind of answers and anything that people had spotted. You can find some really good things in there sometimes, but across the board right now, I think no one really has any rationale for this dip. It's another fart in the wind in the case of cryptocurrency markets. Markets can move up a few $100 in the case of Bitcoin's price, and they can also drop a few $100 on a whim. It's going to be the bigger catalysts that come and that are really going to define this trend and rally. And I don't think we're going to get a consistent, serious uptrend until we break past the all-time highs at 20K. But again, it's just my opinion. All right, so let's go ahead and talk about these comments from the Secretary of State of the United States, Mike Pompeo, who's currently the Secretary of State in the Trump administration, and focus in on his comments on his recent CNBC interview. I think this is very important to hear from the Secretary of State. It's a very high position in the sense of the federal government. And I want to spend some time to talk about some of the kind of highlighted comments they mentioned here in the CoinDesk article. So he was doing an interview with CNBC's Squawk Box, one of the old series that's been on there for a while, how to regulate both Facebook's Libra and Bitcoin. Now, you guys probably already are going to say and think the same things that I'm thinking, but we'll go ahead and just read right through it. So he responded, "My sense is this: we should use the same framework that we use to regulate all other electronic financial transactions today. That's essentially what these are. These are monies moving through markets, or in some cases, disintermediated transactions. The same rules apply to transactions flowing through SWIFT or flowing through our financial institutions ought to apply to those transactions as well," Pompeo explained. "I concede it will be difficult to do." All right, so I want to build on this here because I think this is the majority of the kind of important quotes when it comes to these topics that we have to focus on, at least in the article. And I want to make it very clear. I think Mike Pompeo is being very rational in his statement that it's going to be very difficult to do because you cannot basket Libra and Bitcoin together, because as we've talked about on the channel before, guys, this isn't just me being, a cypherpunk anarchist, against the government. No, that's not what I'm doing here. What I'm saying here is that there is a systematic difference between Bitcoin and Libra, at least at the current state. Libra hopes to be like Bitcoin and other cryptocurrency networks, where it is permissionless, where it is distributed and open to anyone in this case. But even though its technology may be open source, we might be able to see the code and audit it. At the same time, Libra is not a cryptocurrency. If there is any way where a government can get a backdoor to either controlling the underlying network or a backdoor to your private key to be able to freeze your funds, to be able to strip you of your wealth in any way, shape, or form, or freeze you from transferring that wealth, that is not a cryptocurrency. It is absolutely against the cryptographic nature of cryptocurrencies that uses public-private key encryption, right? And no matter, if you're violating that encryption in that case, if you're still using public and private keys in the case of Libra, if there is a way where transactions can be frozen on the network and censored, then you are again violating that core fundamental of cryptocurrencies, the censorship-resistant nature of a cryptocurrency. That's why many people out there talk a lot about a lot of altcoins out there that really aren't that censorship-resistant, that have been attacked, from proof-of-work networks to proof-of-stake networks, all kinds of different cryptocurrency networks that have not been able to keep and attest to that principle. I think that, under my definition at least, that's a key principle here. Now, I've rambled on enough about that. In the case of Mike Pompeo here, I have no doubt that they're going to focus first and foremost on Libra, and they're going to have a damn good chance of regulating it, because Facebook and the conglomerate of companies on the Libra Association are going to have to meet the needs of regulators, because if they don't, they are central targets. If the federal government or the financial sector lobbies hard enough and has enough power and jurisdiction to weigh down these tech companies regulatory-wise, then in this case, they're going to face some serious penalties if they don't abide by the regulations. But the great thing about Bitcoin and other cryptocurrencies is that you don't need a money transmitter license. At least not at the moment. And if Mike Pompeo or other regulators believe you're going to need to get a money transmitter license in this case, like banks and financial institutions do, then they've got another thing coming to them. That's a stupid idea to think that that's ever going to be a practical solution. So you're either going to have to regulate them outright and make it illegal to use cryptocurrencies, or penalize people dramatically. But I think if you do that, you're going to push people to go underground, and they're going to build better technology, more privacy in cryptocurrencies, less traceability, and even less control for governments, which I don't think is an optimal solution. I don't want people per se using crypto for criminal activities. I want to see it being used for good everyday commerce, in this case, similar to how the internet is used by the vast majority of people for good use cases. But again, we see time and time again that governments do try to overstep their boundaries because they don't understand the technology and its potential, and it tends to bite them back in the rear end. So we'll have to see what happens. I would let this space flourish and let it become the space we all know it can be, which is a global hedge against the failures of central banks, as well as providing a network for people in a lot of other areas of the world who have it less fortunate than we do, that need the financial freedom to be able to transact and settle transactions in a way that to us may seem kind of foreign or unnecessary. To many, though, that censorship resistance is very impactful. All right, enough motivational stuff there. Let's go ahead and talk about what's going on in equity markets. So if you guys haven't already, I highly recommend, I'm not trying to force you guys to do anything, but man, if you haven't seen it, it was just, the conversation just flowed. It was perfect. I got to sit down with Alex Saunders from Nuggets News, and we had a great macro conversation the other day. You guys know I love my macro rants, so if you guys like it as well, make sure to check it out. It was a great talk we had. Went on for about 40-something minutes. You can just play it in the background and stuff, listen to it. I think we had a great conversation summarizing what's going on right now in the sense of global equities, the housing market, the bond market, the big, kind of global bond Ponzi that's going on right now with the negative yields. So there's a lot of things, really interesting things going on. But I want to spend some time to focus in on the United States. This is obviously where we talk about a lot in the sense of markets, and it's probably the most relevant equity market that you want to have your focus on. If any of you want exposure to equities right now, if you're still thinking that there's room for equity markets to expand, it is likely going to be the United States. And the reason for this, I'll back this up in this case and kind of explain it and build on what we talked about with Alex the other day. The reason why is that right now, from not only equities, but to things like treasuries and the actual dollar itself, as much as a lot of us contrarians rail on the United States, and I think we all kind of share the agreed view that down the road in the next few decades, it could be as soon as this decade or 2 decades out, whatever it may be, that we are going to see a serious challenge of the dollar being the world reserve currency. I 100% agree with that. In the short term, though, the United States is extremely strong. Not fundamentally so much in the economic growth of its country, but when it comes to these baskets of different assets, from equities to treasuries and the currency itself, the US dollar. Now, why is this? Well, we have to take a look at what's going on outside the United States. It doesn't mean that the United States is inherently strong fundamentally, as I've talked about. It actually has a lot to do with the fact that right now, the vast majority of a lot of leading world economies, from Germany to Japan and a lot of other European markets, are starting to see negative yielding bonds. We've talked about this a lot on the channel. It's now ballooned. Crazy enough, guys, we were just talking about being 15 trillion. It's now $17 trillion of negative yielding debt across the world. Can you believe it? 2 trillion just added in the last week or two. Well, this problem is only brewing, and I would estimate sometime in the middle of 2020 we're getting this up to 25 to 30 trillion if this continues at the pace that it has. And that's a very scary thing. If we continue to move this pace and build this huge trillion-dollar asset bubble, that's going to mean that a lot of people are losing money continuously in order to give money to government for them to borrow. So people are going to move out of those assets and move into something that's either yielding them something if they can get it, or nothing. And that's why gold's been going up. That's why I think crypto like Bitcoin has been having a severe rally this year as the negative yielding debt crisis has started to brew and people have started to notice it. But along with that, a lot of people are going to flock to the dollar. They're going to flock to treasuries because right now, even if the Fed cuts rates, treasury yields looking pretty nice in the U.S. comparative to negative rates. And the thing is that a lot of people, for example, talked this past week about how in China, the Chinese have started to sell off treasuries. They're not getting the exposure to U.S. debt as they used to have. And in fact, Japan is now the largest holder of U.S. debt. So what does this tell us? It tells us that a lot of countries like Japan and a lot of European markets soon enough are going to be scooping up U.S. debt. They're going to be taking the burden that China used to take on, and they're going to fill that void. In fact, they're overwhelmingly going to take that position of buying U.S. debt because it at least gives them a yield. It gives them a hedge in this case because with U.S. treasuries, you're earning U.S. dollars, and U.S. dollars are in serious demand right now. We've got the dollar-denominated debt crisis that's been going on in emerging markets. We've got so many different factors right now weighing down the euro, the Japanese yen, a lot of major currencies across the world, the Australian dollars, as Alex, I think both and I had talked about. We're seeing this again, this squeeze towards U.S. markets. And this leads me to my last point in the sense of equities. U.S. equities have been the best performing out of most major markets, outside of a few emerging market economies, from my estimates, or at least from what I've seen. U.S. markets have been absolutely killing it. Now, the last year and a half, they've been flat, but that's better than down 10, 20, 30% like some of the major indices across the world in a lot of developed economies. So this is what I mean here in the sense of the United States. Just want to give you guys a quick little lay down on that. Again, I wouldn't stop it there, guys. If you didn't watch the interview with Alex, I recommend you guys go watch it. I think it was a really quality, gem of a discussion in that case. I don't get to have those every day. I get kind of busy with a lot of things, and it is really nice to talk with someone like Alex who's so well spoken. And I think we need to have more of that on the channel and stuff, whether it be with Alex or other individuals. I think it was a great chat. And that's the kind of stuff I think you guys should really be studying right now if you're trying to understand what's going to fuel crypto markets in the long term. Bitcoin is going to first initially serve as a hedge, but it could become a lot more after that. It could become a massive network for settling different types of financial transactions of all different types. There's a lot of interesting use cases for Bitcoin and other cryptocurrencies. But anyways, I digress. I'm rambling on, guys. I hope you all are having a fantastic day wherever you are. Thank you so much for watching, guys. If you guys want to go ahead and find a way to support the channel, there's a lot of links down below in the description to get you guys started on a lot of great applications, as well as finding ways to help me out here and producing the content that I make. But outside of that, if you guys could leave a like, comment, I'd appreciate it. Love to know what you all think about the things that we discussed today. But until the next video, I'll see you all in the next one. Stay tuned.